Ladies and gentlemen, my name is Greg Michalowski. Today's date, July 1st, 2016. We're heading into the weekend. I thought I'd take a technical look at the euro versus US dollar. What have we seen in this currency pair? Well, we gapped to the downside, or we gapped lower on the opening and to the downside on Monday. Made the low on Monday, the low for the week. That level came in at the 109.70 level, the 109.70 level. Then we started to build back to the upside. Up day on Tuesday, up day on Wednesday. Lots of choppy action though, and Thursday we came back down, closed higher on the day, closed right near the 200-day moving average. That's the green overlay line here in the chart, kind of going sideways, but that is the 200-day moving average. In trading here today, we moved back above that 200-day moving average and squeezed ourselves up past to the 200-hour moving average into the 50% retracement. This is the 50% retracement of the move down from the pre-Brexit high to the post-Brexit low. And that 50% came in at 111.67.8. The high price came in at 111.68.8 or something like that here today. And the market came back down over the last 4 or 5 hours. The market's been holding below the green line. That's our 200-hour moving average. And that's sending this pair into the weekend with more of a bearish bias, leaning against the 200, leaning against the 50% retracement. I'm going to bring yourself back to the Monday here, or last Friday actually, when the price of the lows, the Brexit lows here, came all the way up. And we did move above that 50% retracement level at this level right here and this level right here. But that was only by about 20 pips, and this was a little less than, I don't know, a little bit more than 10, a little bit less than 20. And so I would consider these breaks to the upside as more or less holding the 50% retracement level. Sellers against the 50%, sellers against the 50%. Today was a little bit more controlled to the upside, but sellers came in with their palms out, selling against that level again. And as you can see, we're closing off those levels and moving further away from the 200-hour moving average as we head into the close. For next week's trading, we're going to use this line as a line in the sand. If we can stay below it, that's more bearish. If we move above it, all bets are off for this currency pair. We're probably going to see further upside potential with the look toward the 112.14 or so level as a level. Also watch this trend line here, which currently on Monday at least, it's going to come in around the 112 level. So 112 to 112.14 is going to be a target on the top side if we are able to get above the 50% retracement level. On the downside, if you take a look at our low price for the day, our low price, we're at bottom right against the blue line. That represents our 100-hour moving average. Now, we went below it yesterday in trading after moving above it on Wednesday, but that market was able to rebound back above it in the afternoon trading. And today, once again, we found support against that level. So that is going to be a support level, that blue line, that 100-hour moving average. And then we're going to be looking down toward this trend line. I should probably redraw it a little better right there, right about there. And that will be a target level as well on the downside for this current currency pair. So draw that in, and you can find that level. So there you have it. A look at the euro versus US dollar. A little bit more bearish. Staying below the 200-hour moving average, staying below the 50% retracement level. Rotation back down toward the 100 and trend line. Seems like the way it may go. My name is Greg Michalowski. Good fortune with your trading, and have a great weekend. Bye-bye now.